Let's see, what time was this? I see it now. All right, so doing a review for Ryan here. What was this, 10 o'clock? So let me go over and grab my chart because I can't see the left side of your chart. Scroll on over. This was at 10:06. Okay, so let's look at it. All right, so what you have is you have the market coming down in a definite downtrend. You did have a divergence because before this was their 6,300, which is probably your reason for taking the trade. Is that accurate? Okay. Now, do you notice an obstruction in your way, the most powerful obstruction that we talk about in the room? The number one level that markets oscillate around. Do you notice that anywhere on the chart? Yeah, settlement. Settlement is the like where everybody made a consensus the previous day of the market's value. So when the market hits settlement, it's going to rock around that area. Okay? So, I mean, your trade literally is right here in a pretty solid downtrend that's been happening. I mean, it's down, 20, 30 points. From 83.20 coming down to 82.90. So it's down like 30 points. In a solid downtrend, it comes down, it hits settlement. You should expect it to bump on settlement. Okay? And move around. So you'll hear me and Lori say often, we're not taking trades like going right into settlement right there. Does that make sense? Marion makes a good point. There's so many setups every day, you can just stay with the trend. You don't have to fade everything. And that might be a good thing for people that are starting out. Yeah, this morning I actually did explain, like, don't take that trade because it's in settlement. All right, so let's keep going. All right, you got an entry there. Didn't make very much. Why'd you get out? Like your entry, I'm guessing that was just slippage, or did you put your entry in on this before that bar closed, or did you enter right as it closed? Ryan. So before it closed down? Good. Okay, awesome. Now, are you using limit with offsets? Or are you using just stops? Or do you not know what I'm talking about? Okay, sell stop limit. What is your offset? Set to. 25? Okay, that's a problem. That means you're willing to give up 25 ticks. Okay? What you want to do is go in and set it to 2. Maximum. You may miss some if it jumps over it. Okay? But you don't want more than 2 ticks of slippage. Okay, so first step is right click on your chart trader properties on the right side. Like where you expand this side over here. Okay, here, I'll show you from the beginning, okay? Grab my chart. Go over here. Then in the gray area on the right, right click, chart trader properties. Scroll down where it says off or whatever, you change that to 2 as a max, and then hit apply. Oh, there's no such thing as 0.25. It's in ticks. So if you have 0.25, it's probably not even doing anything, and it's just giving you a market order. All right, cool. So everybody should learn from that right there, right? That'll limit it to where you won't get filled lower than 2 ticks. You may not get filled, but, and you can even lower it. I mean, you can lower it to 1 if you want to, where you only get a maximum of a 1 ticket slippage, okay? All right, sweet. So that'll help improve your entries, which will get you more ticks, and also lower your loss when you do have a loss, right? Now your exit should be a limit order. So why did you get out here? Because a limit order is this price or better. So for example, if I'm taking an order to get out down here, I should have a buy limit. So a limit means I'm going to sell at 82.78 or lower. And you got out like 3 ticks away. You should have got out at pretty much the bottom of this bar. So did you just hit close, or what'd you do? Got nervous, yellow line coming up. Yeah, but the thing is, the 10 ticks was before the yellow line and before the paw. You see that? Your levels, you had your ability to make your 10 ticks from this low to this low before you hit that line. It is ticks. I just don't trade off that chart. I trade off the dome. That's why it's not set to. So don't worry about that. But yes, it's definitely supposed to be ticks. All right, sweet. All right, this trade right here. It just lost. Okay? There's nothing you can do about it. So that was a losing trade. Now, that's if you hadn't hit your 3 trades already. Okay? So some trades are going to lose. You obviously could have tightened your stop. The challenge with tightening your stops up is what? They can get hit out quicker, right? But you do have something that I think you may have missed. You didn't have it on this one because your entry was below it. But what do you have on this one that's in your way? That's an obstruction. Remember, like, identify target, X box or trapped order, identify pattern, reversal bar, identify obstruction. Is there an obstruction, Ryan, for this trade? Because if you just take it, obviously it lost. But is there a reason to not take it? No, because you're below settlement. You're bouncing down on settlement. That's fine. That's not a reason. That's this one over here was flying. The market was flying down, and then it's taking an order right off settlement. Hadn't even had a bar open and close above it yet. This, I mean, we've blown past settlement. Now we're just bouncing off of it. So yeah, you got ice, red ice. So that is the highest point out of the 70%. Where all the volume happened the previous day, and you're getting in before it. Watch what happens. It goes down, pops it, comes back up. This one was underneath ice. Okay? By the way, this one right here was also underneath ice. So you didn't take this trade. That would have got 10 ticks. You took this trade, this good duplicate, got 10 ticks. And then you took this trade right into ice. So we missed 1, and we took 2 we shouldn't have because of right into very strong levels. Does that help? And I'm not just trying to be like, oh, here's all the excuses. I'm trying to be like, we teach about the levels and walls. Okay, sweet. Like I said, we want the good and the bad. Let's see here. Where did it go? Okay, so that one we already covered, the ice right there. Just looking along to see anything we got. Okay, here's a good trade coming right off of a wall. Remember, gaps are not the same as walls. It's coming right off of a wall with an X box, with the trapped order, in a range, with a paw. Because we're just ranging up and down. So there's 10 ticks right there that you didn't grab. And we're in a range, so we're not worried about divergence. Okay? Like when we're ranging like this, there's not divergence because there's not a trend. Like this isn't a trend, it's just a range. Up and down, up and down. Okay? So yeah, when you get an X box trapped order with a paw, with two level, like you got a gap level and a wall, yeah, that's a money trade. Okay? So now we go down here, and we're not at the bottom of the range anymore. Remember we made a new low here. Let's see, where is the entry on the Xbox trapped order? So right there, right into the paw. Okay, so I'm gonna tell you what I don't like about this order is that it's in the middle of this range. So, like, I should expect a further pullback. Doesn't have to go all the way to the bottom, but I would expect a further pullback. And again, see what happens around ice. You know? I mean, here's another trade that I wouldn't take because, again, I'm not going to get my 10 ticks before ice. That one would have worked. But do you see how we're in the middle of the range and you're taking it? And, like, we're sort of expecting it to come on down? Yeah, and volume went to crap. Like, look right here. Like, volume went way down. Like, we're at, like, 50%. And, you know, I'm not trying to, like, get you just to tell me yes. If it doesn't make sense, please tell me. But yeah, it's more like you expect it to do an elevator, which is where it comes up by one bar and comes back down and then goes down a couple bars. This one would have been a great setup if it would have been off the wall or wouldn't have had ice in the way. But like I said, I wouldn't take that one and I wouldn't take this one. These are two trades that would have won that I would have missed out on. But I'd rather wish I have something I don't as have something I wish I didn't. I'd rather wish I had a win than have a loss I wish I didn't have. All right, so it's making a lot of sense. All right, awesome. Okay, so now we got one more screenshot here. This is great. I love doing this stuff. It's like, I want to hear about the bad days because that's where the lessons are learned, in my opinion. You know, when everybody's just like rocking it, usually not a lot of lessons to learn. But when you have a rough day, like if we can go through and do that, then you can learn, everybody can learn. I'm recording this too, so. All right, so let's look at this. What time are we on? You're trading all the way in the afternoon. Okay. Let's see here. Let me see what was happening before 13:39. Let me look left. back out even more. All right, so look at this range. I'm just draw this line right here. See the top of that, where we're just hitting that over and over and over again? We could even raise it up a little bit more, like right there. But do you see how we're breaking out of the range at this point? So what would you call this? Looking, not even looking at the trade symbols, what would you call that? Would you call that a breakout? I'm just trying to make sure we're on the same page. Okay. So if a breakout, what are we doing? What are we trending now that we're breaking out of the range? What direction? Trending up. Okay. So we're trending up, and then all of a sudden we get this stuff at the walls. Let me come back over to yours, because this is right as we're trending up. It's going up, 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 and then we get shorts. Okay. You don't really have divergence because you haven't had a trend. You've been in a range. So remember, let's check this out, because I know that's what you're thinking. We got divergence. But look, we have a range. We're range bound. I need divergence on a trend, like it's going up and then it comes down, it's going back. But it keeps making higher highs, higher lows. So you're looking at divergence immediately, but you're looking at divergence on a trend. You're not looking at divergence on... You're looking at divergence on a range, not on a trend. So you got to treat these ranges a lot different than you do trending markets. Some people get so caught up in divergence that it really jacks them up. Okay? And some of the best things you can do, no, divergence doesn't matter in range-bound trades. And once you've broken out of it, don't count that first one as a divergence. Because you know what happens is you have what's called fake breakouts. It'll pull out, it'll pull back, it'll pull out, it'll pull back. Sometimes it'll fly back through the other way, or it'll take off. But I would only take trades in the direction of the breakout of the range, of the trend. Because you're going counter, we're making a trend. We're saying, hey, we're going up now. And the market has this wall right here and these magnets, so it's fighting. Boom, boom. And look where it's fighting. It's fighting between the top of the range and the gap level with the the stack with the two magnets. Just literally fighting right there. Yeah. So it's that whole looking left is a big deal. And traders are like, oh, you just got to trade the right side. Well, you trade the right side of the chart, but you trade it by looking left. So that would have helped you on that one. And notice, you had chop. You had true chop. You didn't take the first one. I'm not sure why. But, you shouldn't have. I'm not sure why you took the second one. But what I'm saying right here is, you had down, up, down. That's 3 bars in a row. You're in chop. The best sign we get is we get a couple clusters, but we didn't get 2 clusters. But you got 3 bars closing up and down side by side. You got chop. You can't define it any better than that, right? Does that make sense? And you don't want to trade when there's chop and no room to make money. You know there's not room because you had this little wall. What was resistance on this range has now become support. So even though there's not a line there, if you look left, you can see that line. You can draw that. So some of our traders, what they'll do is they'll actually draw boxes. Like this. As soon as they see that defined, range going on, and they'll just draw it way out like that. So is this helping? Is that making sense? Range versus trending? Using divergence on trending markets, not on range-bound markets? And then being really careful when you're going into an ICE level or what was a support resistance level or settlement. Then we go over here We don't have divergence on the first one. Okay, but now like we're obviously turning around. We're making higher lows right there. That actually is a short you could take. Okay, so that would be a potential profitable trade. That's a little more. I understand how that could be a little more challenging. And also the biggest problem with this one is it's still going into blue ice, so you'd be nervous on taking it. So I'd see like it could be taken, but I'd see like I'd be hesitant just because of that wall right there. And this went, by the way, really fast. See all these low numbers? This is a fast down move. All right, so let's keep going. All right, so here you got another one. If you're gonna take it, you better take it. You better take your profit before that. I mean, it would have made it, but you better take your profit before that red ice. It's like right there, you could have got in this trade because you did have a like you're trending up and you have a divergence. You're not range bound yet, right? Because it just started. You go up there, you got a divergence, 447 versus 1174. You could take that, but I would be taking my profit early at red ice. So if my stop would like my take profit down here, I'd move it up, just in case it decides not to, break through. So now we're just sort of chopping around at this point. We're in a new range. Looking for a trade. Okay, now we're going up. And you took a short against this long trend. So this is definitely an upward trend, and you took a short right there, and that got you. And again, look at this. Down, up, down, up. I mean, like, we're literally in chop. 3 bars in a row. And it's going against the trend on top of that. So it's sort of the same thing as the one before. Don't take them when it's like down, up, down, and then all of a sudden you get an inch, like, don't do that, because that is a definition of chop. It's off the gap level, which is great. It's an X box with the trapped order. But you got paw. Now you got double. Now you got defined chop already with the warning that it's coming. Okay, do you see that? Like we have a be careful because the market is about to chop on you. So the market's about to chop. And what happens is sometimes it'll chop right there. Sometimes it'll move a little and then chop. So use a lot of caution. Make sure you have room when you take the trade. Okay? This one right here, again, right after, we just had another cluster, but what's in your way? You got that gap wall in your way, and you took the trade right into the gap wall. You see that? Like you literally, I just said, okay, I'll go into the gap wall and take the trade. So you're trading like right into walls. And you're trading right into chop. And most of your trades are counter trend trades. Trending up, trending up, trending up. You don't even have any divergence to confirm these. You're at 11,000 versus, 447. Unless you may have DR. Yeah, you do have DR divergence. Okay. So you got your divergence, but you still have an obstruction. So before you identify your target, Xbox with the trapped order, identify your pattern on a reversal bar, identify obstruction, and then identify entry. So you just want to make sure, is there room for 10 ticks without a wall being in the way, without a stack being in the way? I don't know. Why don't you make one for us, David? That would be awesome. Like, seriously. So, did everybody learn something out of that? Do y'all like that? And we called 3 for 3 winners this morning. But at the same time, some traders had some trouble. And these are lessons that can be learned, used, and really help you going forward. And I hope it helped a lot of you. So, Ryan, I appreciate you being able to put it out there and not worry about, like, what are people going to think about me? Like, you're more worried about how do I become profitable, right? So I love doing this stuff because a lot of times, if it was a bad day, it's a bad day. But sometimes it's just not seeing what you need to see. And in this case, that's what it was. So, I mean, we literally 1, 2 stops there, and then we had several other stop outs that gotcha. And they could have easily been avoided. Awesome. So again, this is Daryl Martin with ApexInvesting.com doing a trade review for one of our traders that had a tough time in the market today. And I want to give total kudos to Ryan for being willing to share his stuff and learn and get better. And I challenge the rest of you to do the same thing.